Yeah, my dear students, let us start with a new accounting standard, that is valuation of inventories. Not lengthy standard, but some areas which you should remember while understanding this standard. So, this is the points which I would like to revise with you while doing valuation of inventories, my dear students. First of all, the scope, you just have to remember it does not apply to financial instruments held for sale, or rather than writing this big word, I will just say shares and securities held for sale. When I say scope, it does not apply. Securities held for sale. Second, work in progress of construction contract. Third is nothing but work in progress of service provider, and remember the last, producer's inventory. Yeah, I'm a cattle grazer, a farmer, then the items of inventories will not be covered under this standard. Then coming on to definition, there were three things. Do you remember the three things? Yes, very good. Assets held for sale, then assets in the process of production, and the last was raw material and supplies to be used for production or rendering services. Okay friends, so this was your definition. Now comes cost. I did not talk too much on this definition, nothing but here we are talking about finished goods, work in progress. In the second part we are talking about work in progress. First part is nothing but finished goods and stock in trade, and of course third part is raw materials. Now coming on to the important area is how to find out the cost of that particular, because you say inventories are to be valued at cost. Standard says that cost will be purchase cost, means whatever expense you incurred for purchasing, conversion cost and other cost. Of course, while finding out purchase cost, the purchase price plus the direct expenses, tax and duty paid should be added, provided we are not going to get credit of it. Conversion cost, in this you just have to remember something referred as factory overheads, that is fixed factory overheads, or I can just say fixed overheads. What is to be done for fixed overheads? See, remaining conversion cost, everything will be added. Only for fixed overheads, it is to be added to the cost of inventory based on capacity, normal capacity or actual capacity, whichever is higher. You have to find out the recovery rate based on the capacity. Other cost, obviously expenses which are necessary. This is the important area to bring the inventory in saleable condition will be added off. Now following expenses are not to be added in inventory. So not to be included. Which are the expenses not to be included in cost of inventory? General admin. If you have done any kind of administrative work for exclusively buying that particular asset, that is inventory, then it will be included. General administration, selling and distribution. Thereafterwards, my dear, abnormal losses. These are not to be included. Of course, as far as these two are concerned, it may not. Like storage cost, if it is necessary, part of my production, it will be included. Otherwise, it will not be included. Same way, borrowing cost. Borrowing cost can also be included in cost of my inventory. But when can borrowing cost be included in cost of inventory? Provided accounting standard 16 allows. If accounting standard 16 allows, then obviously borrowing cost will be included. Clear till here, friends? Okay. So this is all about my cost. How to find out cost, in which I would suggest fixed overheads you have to remember. It's a good point that fixed overheads will be added, but not based on whatever is incurred. It will be based on capacity, normal capacity or actual capacity, whichever is higher. Now friends, thereafterwards valuation techniques were there, that how to find out cost when I am having multiple times purchases at multiple cost. So valuation techniques, in that the standard divides it into two parts. Items of inventory are interchangeable. Items of inventory are non-interchangeable. Now, if items of inventory are interchangeable and if items of inventory are non-interchangeable, if they are interchangeable, means they are identical in nature, then I can use first in first out method to find out the value of my inventory, or weighted average method. If they are non-interchangeable, then I can use only one method, which is specific identification method. What does it mean? It means that I'll be identifying each and every item of inventory on individual basis for the purpose of valuation. Yeah. Over and above this, there are two more methods which can be used by manufacturer. You can use standard cost method. Standard cost method is nothing but those manufacturers, I can say, who have standard costing system to evaluate cost. They are having budgets. So these people can use standard cost method for finding out their value of closing stock. And the second method is also proposed by the standard for retailers who do not maintain any stock records, that is retail inventory methods. So those who don't have stock record can use this method, retail inventory method. See, if you are having stock records, then first in first out and weighted average is the best. But if you don't keep stock records, then retail inventory method, nothing but also referred as adjusted selling price method. What we can do is nothing but, first of all, selling price of the goods which are unsold, from that just reduce of the gross profit. So what you get is nothing but the cost price. Obviously this is estimates, this is just an estimate, it's not necessary it will be at this price only. Now my dear students, the most important area, because if you look properly, I have covered cost, valuation techniques, NRV. NRV, I wanted to go with valuation principles only. We say that it should be valued at cost or NRV. Cost, we found out. NRV, of course, when I say net realizable value, this is only for finished goods, stock in trade and work in progress. This is how I will compute NRV. Nothing but estimated sale value less estimated cost to complete and then estimated cost to sell. So what you get is nothing but NRV. This is NRV, net realizable value. estimated selling price, from that estimated cost to complete, from that you have to deduct estimated cost to sell. So, what you get is NRV. Clear, my friends? Now, understand this point, that finished goods, as far as valuation principle is concerned, finished goods should always be valued at lower of cost or NRV. WIP will always be valued at cost or NRV. Now, how to find out NRV of WIP? Nothing but this is what we know, estimated cost to complete. So, we are going to complete the goods, then only we will be getting this much amount. Now comes raw material, and for raw material it is not lower of this. For a raw material you have to make two parts. Cost price is less than NRV, or I can say replacement value, or the cost price is more than replacement value. If cost price is less than replacement value, my friends, raw material will be valued at cost. Raw material will be valued at cost. But if cost price is more than replacement value, then you have two options. Finished goods NRV is more or equal to cost. Finished goods NRV is less than cost price of finished goods. Then the valuation depends on what is the finished goods NRV. Finished goods NRV is more or equal to cost price of finished goods, then raw material is valued at cost. But if finished goods NRV is less, then raw material is valued at replacement value. Clear? Now, one more point before I end up the theory and start with some question answers. Items of inventory are to be valued on item by item basis and not on global basis. See friends, what does it mean? It means you have A, B, C, D, 4 items are there. You are having cost and NRV of all the 4 items. It does not mean you will bring total of all cost, total of all NRV. You will find out it on individual basis. Yeah, items of inventory are to be valued on item by item basis and not on global basis, provided they are distinct in nature. Then this is to be done, that I will value it on item by item basis. So, this is what our theory also says. This is our definition: held for sale, process of production in form of material and supplies. 4 areas does not get covered. 4th one is nothing but producer's inventory. Cost, purchase cost, conversion cost and other cost. And then of course, fixed overheads is on normal capacity. The method: specific identification, first in first out, weighted average. Other methods are standard cost and retail price method. Yeah, this is how NRV is to be found out. For material, my dear students, I would say you just have a glance over it. Cost price is more than replacement value. I am talking about cost price. Whose cost price? Raw materials cost price is more than replacement value. Then finished goods NRV is more or equal to cost price of finished goods. Then raw material will be valued at cost. Otherwise, it will be valued at replacement value. FGNRV is nothing but finished goods NRV. Finished goods NRV. Okay, class 4 questions are already done. Let us now come to past paper questions. Let us discuss those because they are very small questions there. Some of them are selected by me here in for discussion purpose. Not all of them, I will be discussing some of them. Z Limited ordered 13,000 kg of chemical at rupees 90 per kg. The purchase price includes GST of 7.5 per kg, in respect of which full credit is admissible. Freight incurred amounted to 30,000. Normal transit loss is 4%. The company actually received 12,400 and consumed 10,000 kg. The company has received trade discount in form of cash amounting to 1 per kg. The chemicals were delivered in containers. The containers are not reusable, hence sold for 500. The admin expense incurred to bring the chemical was 10,000. Now friends, two things which are important here for your understanding is that the containers which are not reusable, you are selling it off. So you have two options. Either you reduce that 500 from the cost of inventory or you credit it to profit or loss account. See, this is nothing but optional choice. There is no compulsion. And the second stuff which is nothing but here is the admin expenses. What is to be done for this admin expense? Normally, general admin is not to be included, but this is a specific admin done for this purchase of raw material. Obviously, this administrative cost will be capitalized, or I can say this admin cost will be added to the cost of the raw material. Purchase price 89, so you got 65. Freight 1092. Many of you had a doubt, how can 1092 plus 30 become? No friends, admin expense of 10,000 are to be added here. Yeah, it's not been printed here. One more point I would add here is, in this question, this is not 7.5, basically this is 5 rupees. Yeah, this is rupees 5. A small printing error, it is rupees 5. So your credit available is 5. So 1092 plus 10 plus 30, you get 11,32,000. And there is 96%. Why 96% is taken, sir? 4% is normal loss. So my allocation of cost is 90.705. Now my abnormal loss is 80. How did we come at 80? See. Quantity ordered is 13,000. I am expecting 4% normal loss. $520. So 520 will be my normal loss, friends. So how much units I will be receiving? $12,480. Expected to receive. Out of 1240, how much did I receive? $12,400. It means it is abnormal loss. Out of receive, how much is consumed? Remaining is nothing but my closing stock. How much got consumed? 10,000. 2,400 is close. Yeah. The same type of question was there in our classwork also. See, containers used for delivery of chemicals are not reusable. Cost of this container is treated as selling and distribution expense. The sale value of this container will be credited to profit or loss and shall not be considered for the purpose of inventory valuation. Alternatively, may be deducted. Okay, then obviously my answer would have been different. Okay, friends. So this is the solution. So I will be taking 12,480 for the purpose of per unit. Now 10,000 units are sold, so 10,000 into 90.75, and the remaining 2,400 is nothing but my closing stock. That will be multiplied by 90.705, and rest abnormal loss will be transferred to P&L. Okay. These are all repetitive questions done. I'll just concentrate on some questions which are troubling you. The cost of finished goods of closing stock of finished goods. I'm sorry for it. The closing stock. Question number 6. Past papers. The closing stock of finished goods at cost company amounts to 450. The following items are included at cost in total. 100 coats which had a cost of 2,200 each and normally sold at 4,000 each, owing to defect in manufacture, they all will be sold at a balance sheet date at 50% of the normal selling price. It means they will be sold at what price, my dear? It will be sold at 2,000. Now, can I say these are appearing at 2,200? They will be sold at 2,000. It means per coat, I will be having a loss of 200 rupees. So now I have to reduce this 200 into 100 from here. So 20,000 will be reduced with respect to the first part. Second, 200 skirts which had a cost of 50 each. These two were found to be defective. Remedial work in April cost 2 per skirt and selling expense of the batch total 200. They were sold for 55 each. Now, if you look properly, the 200 skirts 50 rupees. So that is nothing but 10,000 rupees cost. What is the NRV of this? They are sold at 55. So 55 into 200. So that gives me 11,000. From that expected cost to complete. So 2 into 200, that is 400 is the expected cost to complete. And selling expenses is 200. Still, can I say the NRV is more than the cost? Because 11,000 minus 400 minus 200, I am going to get 10,400. So it will be valued at cost. So no adjustment required with respect to B part. No adjustment means I don't have to reduce it from my 4,50,000 cost. It is same only. C part. Shirts which had a cost of 50,000. Their NRV at the balance sheet date was 55,000. Commission of 10% is payable on agent. Sir, cost is 50. So obviously it will be 50 only because this is NRV. Don't say 55,000 minus 10% of 55,000. This is what error you might be making. This is already NRV. 55,000 is NRV. So no changes are to be made. So how much changes is to be made in my total cost? 450 minus 20, that is 4,30,000. Okay, friends. One more question. And then we'll end up. Mr. Rakshit gives you the following information relating to items forming part of inventory on 31st March 2019. His factory produces product X using raw material A. 800 units of raw material purchase for 140. Replacement cost of raw material on 31st March is 190. Now, my dear students, can I say it should be valued at 140 only? See, we learned this only, na? That if cost price is less than replacement value, raw material will be valued at cost. Now, here what is the cost price? 140. Replacement value is how much? 190. So, it will be valued at cost. So, no worry, 800 into 140. 650 units of partly finished goods, that is WIP, are in process of producing X and the cost incurred till date is 310. This unit can be finished next year by incurring an additional cost of 50. It means the NRV is 300. You will say, how did you come to know it is 300? My dear students, see, here I got the selling price of this goods. It's given 350. Selling price of X is 350. So, if selling price is 350 here, 350 minus 50, can I say 300? So, 300 is my NRV, 310 is my cost. I will be valuing it at 300 only. And then comes the last 1800, cost incurred is 360. So, obviously, it should be valued at 350. So, even though finished goods NRV is less than its cost, raw material will be valued at 190 only. So, raw material is valued at cost, I am sorry for it, not at 190, will not value at 190, will value it at cost. So, raw material will be valued at cost, that is 140, partly finished goods 300, and this will be 350. Yeah, this is how answer has been made here. Okay friends, so let me end up this session. I hope you would have understood this point also, because this doubt might have arose. Thank you very much. We'll end up AS2.